Dustin Tibbetts here, financial advisor with jazzwealthmanagers.com. Hope you'll check us out. It's always on the shirt. It's right there. That's the best marketing you're going to get out of us. Hey, anyways, quick video here for you for a Friday. It's called Tax-Free Roth Conversion. Is it possible? Maybe temporarily, right? But you want to pay close attention here and see if this is something you want to do. Number one, 2020 has been a great year for for converting Roths because chances are your income's been a little bit lower. If you were in the 22% tax bracket, maybe you made less and you're down in the 12%. And so anytime your income is lower, the markets are lower, you consider a Roth conversion. I can't tell you that that's when you do it, but that's when you need to consider it. Have somebody run the numbers and see what happens there for you. If nobody will, then maybe you'll check us out at jazzwealth.com. Ha! Marketing. Got it in on you. Okay, anyways. Vice President Biden is in the lead with the election there at the moment, if you look at certain polls or you want to believe it or whatever. But he wants to make a lot of changes to how retirement investing works. So a lot of the higher end families that make over $200,000–300,000 a year are thinking, I need to strategize now. I'd rather just get this out of the way. I don't want to deal with the unknown. Let's do this here. One idea that Mr. Joe Biden had, which I don't know if he's going to do it if he becomes the president, but one of his ideas is to level the playing field on 401ks. This has the higher earners, those in the $300,000–400,000 category, thinking about what to do, right? There's a whole bunch of strategies there of what you can do if he does this. Now, to be real simple, let me see if I can highlight this for you. Right now, if you're in the 35% tax bracket, let's just say, you can use any tax bracket. I'm trying to pick on the higher income people here. Well, you get 35 cents of a deal for every $1 you put in your 401k. That's essentially how you break it down. I mean, to make it super duper simple for you. So his argument is if someone's in the 12% tax bracket, they're only getting a 12 cent for every $1 savings there, tax savings. And he says, well, that's not fair. Okay, maybe it's not. We're not here to argue that today. What he wants to do is level the playing field and put it somewhere around 26%. That's the best that we can all figure out here in the financial advisor community at the moment is 26%. Now, that's awesome for those of you in the 12–22% tax bracket. There's a catch. It's not so good for those of you that are up here. You look at that and say, well, I was getting this kind of savings. Now I'm only getting this. I'll probably just go use the Roth 401k. Here's the catch, though, by the way. He wants to get rid of the tax brackets as they are right now. So those are the Trump tax credits. So what's the real number? We don't know. So there's a lot of questions up there in the air. But here's what you can do. Those of you that are higher income earners there, typically when you get to some point, you become more philanthropic, right? You want to help, right? Did you donate this year to a charity, a church, someone that was helping the community, people that lost their jobs, if there was some sort of official charity? Well, you can actually use that to your advantage. It's kind of a weird way of thinking about it, but we like doing weird things around here. So here's how it works. You used to only be able to take 60% of your adjusted gross income for charitable contributions if you itemized your tax return. Don't worry about that if that confused you. Here's how it works now. With the CARES Act, what they did is they said, okay, 100% of your income can count towards charitable deductions there. Okay, that's interesting. So now we have some options. If we're going to convert a Roth, we've got some games we can play there, and games are always good, so let's play some games. Okay, here we go. Let's say that you convert $10,000, right? Okay, cool. How does that normally work on your taxes? If you're brand new to this, let me just explain real quick. $10,000 converted from an IRA to a Roth IRA counts as income. You move the money from the IRA to the Roth in just one big shot like that, and all of a sudden $10,000 gets added to your income. You pay taxes on it, but now that it's in the Roth, theoretically, you'd never pay taxes again. That's kind of a lie because Joe Biden and Kamala Harris, their plan is actually to impose a financial transaction tax, which they're very, very solid on, right? This is what they want to do. So technically, your Roth IRA is going to get taxed if Biden wins. And like I said, I don't care who you want to vote for. I only give people grief when they start touching your money. Doesn't matter what side they're on. All right, anyways, so you got $10,000 going into the Roth. Now, if 100% of your charitable contributions can be counted towards your deductible income, what happens? $10,000 goes into the Roth. That's taxable income. Did you happen to donate some money this year? What if you have extra money? If you donate $10,000 to a charity, then this conversion becomes free. There's no tax owed, no tax due on it. If you happen to only donate $5,000, I don't know, I'm just making up numbers here. I know it's a tough year to be donating money, but if you're in the means or you have the capability of doing it, then now this taxable Roth conversion is only taxed at half the rate. So you only owe half the money, right? Who would you rather give the money to, charity or the IRS? So a lot of people that are in that category, we've been doing a lot of these with our customers lately that are fortunate enough to make a lot of money and be in that position. They're looking at this saying, I'd like to do a conversion. I'm just going to start giving a little bit of money to charity. Maybe I'm not going to give $10,000. I don't have it or something, whatever. But they're going to give some money to offset the cost of their Roth conversion. That's thinking outside the box a little bit, huh? That's the type of thing I like to focus on with customers. Every little dollar, if you already gave $1,000 to a charity or something like that, don't just walk away and say, well, I feel good. I helped them out. I did my part. No, look and see how you can take advantage of that, whether you think it's right or wrong, because the money shouldn't go to the IRS. I hate it when money goes to the IRS that shouldn't go to the IRS. And they're not going to wave their hand and say, oh, by the way, you didn't have to pay us that. You know that's not going to happen. So the bottom line is, if you're charitably inclined this year and have the means to do it, you're doing a Roth conversion, maybe you want to donate some money as well and donate to something that you feel passionate about and offset that Roth conversion. It would be 100% tax-free. All right, that's really it. Just a fun one. Different way of thinking of things. I hope you enjoyed that. I hope you have a great weekend. I appreciate you guys watching, supporting us and everything. Adios. And, subscribe button, thumbs up, thumbs down. No, thumbs up. Do that.